Friends, let me start with a conversation that's probably going to sound painfully familiar.
I was chatting with my neighbor Joyce the other day, and she said something that really hit me. You know, I feel like my money just vanishes every month, and I honestly can't figure out where it's all going. If you're living on a fixed income right now, I bet you're nodding along. When you're retired, every single dollar counts. But there are these sneaky little charges, I call them financial vampires, quietly draining your bank account while you sleep. Today, I'm going to expose the 7 biggest culprits that are probably stealing your hard-earned money right now. More importantly, I'll show you exactly how to stop them cold. By the time we're done here, you'll have the tools to potentially save thousands, yes, thousands of dollars every single year. 1. The subscription trap. Let me tell you more about Joyce. She thought she had maybe 3 subscriptions. Netflix, Amazon Prime, perhaps that meditation app her daughter recommended. Harmless enough, right? Wrong. When we sat down with her bank statements, we discovered 14 different subscriptions totaling $347 every month. That's over $4,000 a year going to services she barely used or had completely forgotten about. And here's the kicker. This isn't unusual. The average household pays for 12 or more subscriptions, and most people can only name half when asked. Source: considerable. Joyce had streaming services she'd signed up for to watch one show and never canceled. A premium meditation app that auto-renewed after a free trial ended 2 years ago. Even a meal kit subscription charging her $120 monthly for meals she never ordered because she'd paused the service but never canceled it. But here's where it gets really sneaky. These companies make canceling incredibly difficult on purpose. Ever notice how you can sign up with one click, but canceling requires calling during specific hours or navigating through multiple screens? That's not an accident. The 3-month statement audit. Joyce gathered her bank and credit card statements for 3 months, not just one, because some subscriptions charge quarterly or annually. Then she asked herself 3 simple questions for every charge. Did I use this service in the last 30 days? Is the value I'm getting worth what I'm paying? If this was brand new today, would I sign up at this price? If any answer was no, she canceled it. No guilt, no, but I might use it someday. Just gone. The results? Joyce eliminated $180 in monthly subscriptions. That's $2,160 per year. But she didn't stop there. For services she kept, she called and asked about senior discounts. Her internet bill dropped by $25 monthly. Her phone plan by $15. In total, she saved nearly $3,000 per year. 2. The insurance loyalty trap. Now let me tell you about Richard, a 72-year-old retired teacher who'd been with the same insurance company for 18 years. He was proud of his loyalty. They sent Christmas cards. He knew his agent personally. That family was overcharging him $1,300 every year. Here's something the insurance industry doesn't want you to know. Loyalty doesn't pay. It costs you. Insurance companies practice price optimization, gradually raising rates for existing customers while offering sweet deals to new ones. Source: CBS News. Richard was paying $3,400 yearly for his coverage. When we convinced him to get quotes, he found better coverage for just $2,100 per year. But here's the best part. When Richard called to cancel, his original company suddenly discovered discounts they'd never mentioned before. Senior citizen discounts, multi-policy discounts, even a discount for the security system he'd installed 3 years ago. Funny how those discounts only appeared when he was walking out the door. Your insurance action plan. Start by gathering your current policies and writing down coverage limits. Get quotes from at least 3 companies, and don't just go online. Call and speak to actual agents. Tell them you're a senior looking for the best rate. Then call your current company's retention department. Don't call regular customer service. Ask specifically for customer retention. These folks have special powers to offer discounts regular agents can't. 3. Banking fees. Death by 1,000 cuts. Catherine was a sweet 74-year-old widow who'd banked at the same place for 35 years. She trusted them completely. That trust cost her $420 every year in fees she didn't even know she was paying. Monthly maintenance fees, overdraft charges when automatic payments hit before Social Security deposits, ATM fees, even charges for paper statements. Banks love seniors because we're trusting and often don't question charges. Source BBN Times.
Here's what really upset me. Catherine's bank offered completely free senior accounts with no fees and no minimums. They just never told her about them. After 35 years, when she asked why, they said, "Well, you never asked."
Taking control of your banking. Request a fee history report from your bank. They're required to provide this. Prepare to be shocked. Next, research senior-friendly banking options. Many banks offer special accounts for customers over 55 or 65 with significant benefits. No minimums, no maintenance fees, free checks, even free safe deposit boxes. Set up balance alerts on your phone so you never get surprised by overdraft fees. Consider consolidating multiple small accounts that trigger minimum balance fees. Catherine made these changes and reduced her annual banking fees from $420 to under $50. That $370 in annual savings went towards something she actually enjoyed. 4th, utility company games. Harold was an engineer, so he was detail-oriented, but even he fell victim to utility tricks costing him over $150 monthly in unnecessary charges. The biggest culprit? A surge protection device the utility had installed on his meter 8 years ago for $18 monthly. Harold never requested it, never used it, and didn't even know it existed until we went through his bill line by line. $18 might not sound like much, but over 8 years, that's over $1,700 for a device he never wanted. His electricity rate was variable and had crept up to 40% higher than fixed rates available to new customers. His cable bundle had grown from $89 to $187 monthly through enhancements he never requested, decoding your utility bills. Utility bills are deliberately confusing. Companies hide charges with vague names like regulatory cost recovery or system benefit charge. Don't let this intimidate you. Go through every single line, not just the total. Call and ask them to explain every charge in plain English. Look specifically for equipment rental fees, premium services you never requested, and variable rates that have increased. Ask about senior discounts. Many companies offer these but don't advertise them. Also ask about auto-pay or paperless billing discounts. Harold saved $152 monthly, over $1,800 yearly, and put that money into his grandchildren's education fund instead of utility company profits. 5th, medical billing Wild West. Margaret's story will probably make you angry. She went for a routine cardiology follow-up that usually cost $20 after insurance. This time, she got a bill for $620 for the exact same 10-minute visit. When Margaret called, they said there were no errors. The visit was coded differently, and there was a facility fee because the doctor moved offices. Margaret almost paid it. She trusted her doctor and assumed the charges were correct. Fortunately, her daughter insisted they investigate. Here's what they found. The visit was incorrectly coded as a comprehensive consultation instead of routine follow-up. The facility fee was completely inappropriate for an office visit. When they challenged these charges, Margaret's bill dropped from $620 to $20. Source: Finance Key. But Margaret also discovered prescription costs vary wildly between pharmacies. Her heart medication cost $340 at her usual pharmacy, but only $95 at a warehouse club 2 miles away, protecting yourself from medical billing. Healthcare billing errors affect 8 out of 10 medical bills, and errors almost always favor the provider, never the patient. Always request itemized bills, not just summaries. Look up medical codes online. There are free websites explaining what each code means. If a code doesn't match what happened, challenge it. Get cost estimates up front for procedures and tests. Ask what they'll charge, what insurance covers, and your out-of-pocket cost. For prescriptions, use apps like GoodRx to compare prices. Sometimes cash costs less than insurance, especially for generics. Ask about patient assistance programs from drug manufacturers. Most major companies offer these for seniors, but doctors rarely mention them. Margaret now saves over $2,000 yearly on medical expenses and feels empowered instead of helpless when dealing with healthcare billing. 6. Auto-renewal traps. Robert valued stability and didn't like change. His cable bill started at $89 monthly but crept up to $187 through small increases and enhancements he never requested. His security monitoring grew from $29 to $67 monthly. Even magazine subscriptions became a $340 annual expense for publications he rarely read. Companies counted on Robert's inertia, his tendency to just pay bills without questioning. Their strategy worked perfectly until his grandson helped analyze expenses. Breaking free from auto renewals. List every recurring service you pay for. Research current promotional rates. New customers often get much better deals than loyal existing customers. Call retention departments for each service. Explain you've been loyal but found better rates elsewhere. Ask what they can do to keep your business. Be prepared to actually switch if negotiations fail. Companies can smell bluffs and only offer real discounts if they believe you're serious. Consider paying annually instead of monthly for services you'll keep long-term. Many companies offer 10 to 15% discounts for annual payments. Robert negotiated lower rates and switched providers, saving $210 monthly, over $2,500 yearly. He used that money to take his grandchildren on a cruise they'll never forget. 7. Tax overpayments. Dorothy had been overpaying taxes by nearly $2,800 annually for 4 years straight. That's over $11,000 that should have stayed in her pocket. Nobody told her about the extra standard deduction for taxpayers over 65. Nobody mentioned much of her Social Security income was probably tax-free. She was having too much withheld from IRA distributions, giving the government an interest-free loan of $180 monthly, source FA Magazine, claiming what's rightfully yours. If you're 65 or older, you get an extra standard deduction, $1,550 additional if single, $1,300 per person if married filing jointly. Your Social Security benefits might be partially or completely tax-free depending on total income. Medical expenses are deductible if they exceed 7.5% of adjusted gross income. Look into tax credits for energy-efficient home improvements. Review withholding annually. If you're getting large refunds, you're giving the government a free loan. Dorothy freed up $180 monthly in cash flow and saved $2,800 annually, finally affording home repairs she'd postponed while having money left for travel. Taking action, your 30-day plan. Don't feel overwhelmed. Feel empowered. Here's your action plan. Week 1. Audit subscriptions using 3 months of statements. Cancel what you don't need. Negotiate what you keep. Week 2. Get insurance quotes from 3 companies. Call your current company's retention department with competing quotes. Week 3. Request fee history from your bank and ask about senior options. Review utility bills line by line and question unclear charges. Week 4. Review medical bills for accuracy and verify all charges. Check your tax situation for missed deductions and credits. This isn't just about saving money. It's about taking control of your financial life and refusing to be taken advantage of. You've worked hard for decades and deserve to keep every dollar you've earned.
The strategies I've shared are your weapons against financial predators. Every dollar you save from unnecessary fees is a dollar you can spend on things that actually matter. Travel, hobbies, family experiences, or simply the peace of mind that comes from financial security.
The ripple effect. You know what's beautiful about these stories? None of these folks stopped at just saving money. Once they realized how much control they actually had, it changed their entire relationship with finances. Joyce didn't just bank that $3,000. She used it to visit her sister in Florida for the first time in 8 years. I finally felt like I could afford to live again, not just survive, she told me. Richard took his $1,300 insurance savings and started a college fund for his granddaughter. I always wanted to help with her education, but thought I couldn't afford it. Turns out I could all along. I was just giving that money to the insurance company instead. This is what happens when you take control. You don't just save money. You reclaim your dreams.
Building confidence.
One of the biggest barriers isn't financial, it's psychological. We've been conditioned to believe financial matters are too complex, that we should just trust the experts and pay whatever we're told. That conditioning is costing you thousands. Source: Invested Wallet. Margaret put it perfectly. I used to be afraid to question anything. I thought if it came from a doctor's office or insurance company, it must be right. Now I know better. I'm not being difficult, I'm being responsible. Every time you successfully negotiate a lower rate or catch a billing error, you build confidence. You prove you're not at the mercy of these companies. They're competing for your business, and you have the power to choose. The annual financial checkup.
Just like you get an annual medical checkup, give yourself an annual financial physical. Pick the same month each year and systematically review everything.
All insurance policies and competitive quotes, all subscriptions and memberships,
Banking fees and account options.
investment and retirement account fees, new tax deductions or credits you qualify for, utility bills for new discount programs. This becomes easier each year and ensures you're never overpaying for long periods without realizing it. Addressing common concerns. I know some of you are thinking, this sounds great, but let me address the most common worries. What if I cancel something and need it later?
Most services you cancel can be restarted anytime. Streaming services, memberships, they all want your money back and will gladly reactivate your account. Don't pay for just in case when you can pay for when I actually need it.
What if I lose important coverage? That's why you compare coverage before making changes. Never cancel one policy until you have another in place. Take your time, ask questions, and consult with independent agents when in doubt. What if companies get angry? Good companies respect customers who ask questions and negotiate. If a company gets angry because you want fair value, that tells you everything about whether you want to do business with them. I'm not good at confrontation. You don't need to be confrontational. Try saying, "I've been a loyal customer for X years and want to continue. I've found better rates elsewhere. What options might work better for me?" Polite, respectful, but firm.
Technology as your ally.
Don't let technology intimidate you. It can help. Simple tools like GoodRx for prescription prices, your bank's app for balance alerts, or websites comparing insurance rates can save hours of phone calls and hundreds in overpayments. You don't need to become a tech expert, but these tools make the process much easier. Building your support network. Don't do this alone if you don't have to. If you have adult children or tech-savvy friends, ask for help with research. They can compare prices online or even make calls on your behalf with your permission. Consider forming a bill review club with friends. Meet monthly to share tips, compare rates, and hold each other accountable. Check with your local senior center or library. Many have volunteer programs specifically to help seniors with financial literacy and bill review. The time is now. Every month you wait is another month of unnecessary fees, another month of overpaying for services. The beautiful thing about these strategies is they get easier with practice. The first negotiation might feel scary. The fifth feels routine. Each success builds on the last. Each dollar saved can compound in savings, fund experiences you've postponed, or provide peace of mind from financial security. Your legacy of wisdom. Think about the legacy you want to leave. Do you want to be remembered as someone taken advantage of by companies counting on your silence? Or as someone who stood up for themselves and taught their family financial vigilance? The seniors I've shared today have all become advocates for financial awareness in their communities. They share stories, help friends identify overcharges, and take pride in their newfound financial savvy. You can be one of those people, the one friends come to for bill negotiation advice, the grandparent who teaches financial street smarts along with love and wisdom.
Final thoughts.
Companies count on your loyalty, trust, or inattention, but you now have knowledge to fight back. You understand their tricks and know how to counter them. Start today with just one small action. Review one bill, question one subscription, or make one call asking about senior discounts. Each small step builds momentum toward a more secure, stress-free retirement. Remember, you've overcome bigger challenges than this. You've raised families, built careers, survived economic downturns, and navigated decades of life's ups and downs. Compared to all that, questioning a subscription fee or negotiating lower insurance rates is nothing. You have every right to keep every dollar you've earned. You have every right to demand fair prices and honest billing. You have every right to walk away from any company that won't treat you with respect and give you good value. The companies overcharging you count on you remaining passive, accepting whatever they charge without question, prioritizing politeness over your financial well-being. But you're not going to do that anymore. You're going to audit those subscriptions, shop for better rates, demand fee-free banking, question medical bills, and claim tax deductions you've earned. You're going to take control. When you do, you'll discover something wonderful. You're not just saving money. You're reclaiming your power. You're proving that age isn't a disability, experience is an advantage, and you're nobody's easy target. The strategies are simple. The potential savings are huge. The time to start is right now. So what will you tackle first? Which bill will you review tonight? Which company will you call tomorrow? Which unnecessary fee will you eliminate this week? Whatever you choose, take that first step. Your future self will thank you. Your money is your power. Use it wisely, protect it fiercely, and never let anyone take advantage of the trust and hard work that earned it. Now go show them what a financially empowered senior looks like. The results will amaze you.